strong earnings from a major US memory chip maker are lifting markets across Asia and pointing Wall Street toward a higher open. Japan's Nikkei and South Korea's Kospi both advanced in early trading, with technology stocks leading the way. The spark came from a leading US memory chip company whose quarterly results beat expectations, a signal to investors that demand for semiconductors is holding up. Semiconductors are the components that power everything from smartphones to artificial intelligence systems. When a major chip maker reports strong numbers, it tells the market that the companies buying those chips, cloud providers, device makers, AI developers, are still spending heavily. That matters. South Korea feels this kind of news quickly. The country is home to some of the world's largest memory chip producers, so a positive earnings signal from a US peer tends to move Korean stocks fast. Japan's technology sector caught the same tailwind, adding to the Nikkei's gains. Wall Street futures moved higher in response. Futures contracts give investors a rough sense of where stock indexes may head when trading opens, though they are not a guarantee. Markets can shift before the opening bell. The broader mood here connects to one of the biggest investment themes of the past 2 years: the artificial intelligence build-out. Companies have been pouring money into chips, servers, and data center hardware on the belief that AI will reshape how businesses operate. The risk, from an investor's standpoint, is that the spending is real, but the returns take time. Earnings results like this one help answer that question. When actual revenue confirms that all the AI investment is generating real demand, it gives investors more confidence that the theme has economic substance behind it, not just hype. That said, the picture is not without complications. Global equity markets remain sensitive to several crosscurrents. Interest rate expectations are near the top of that list. The US Federal Reserve's decisions on rates directly affect how willing investors are to hold riskier assets like stocks. When rate cuts look more likely, equities tend to benefit. When the outlook shifts, sentiment can turn quickly. Currency movements and geopolitical risks add further layers of uncertainty. For now, the chip earnings are doing the heavy lifting. But the next test is whether this momentum holds, as more companies report results and attention turns back to the Fed's next policy move. The practical takeaway: if you follow technology stocks or have exposure to chip-related names, watch the pattern in earnings reports as they come in. One strong result sets a tone, but a trend across multiple companies is what confirms whether semiconductor demand is genuinely strong or whether this was an outlier. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.